Hi, my name is Maxim E Savostianov. I am an EY assurance partner based in Moscow and financial accounting and advisory services leader for EY practice in the CIS. I would like to highlight a few points on the benefits of accrual accounting in general and IFRS or IPSAS in particular, based on our experience of work with Russian governmental entities, as well as the state-owned companies. Although both the government and its entities and the state-owned companies in Russia have adopted accrual-based accounting many years ago, we can summarize the benefits of such transition based on the ongoing discussions with the management of these entities and our observations of the developments of these organizations. In addition, currently we are working with the Ministry of Finance of the Russian Federation on the development of the new set of Russian accounting standards for public sector based on IPSAS, which the government intends to implement in Russia in the coming years for all governmental bodies, including the ministries, municipalities, etc. Based on this work, we see what additional advantages the new concepts embedded in IPSAS can bring compared to the classic double-entry accrual accounting principles. Starting from the general and most obvious conceptual differences between cash and accrual accounting, the two key advantages of the accrual accounting are the ability to form a proper balance sheet of an organization, including assets, liability, and equity concept. Doesn't matter what size of organization it is, a government-owned company, a ministry, or even the whole state. Second, the proper timing of recognition of the economic events. The moment when the event occurs in most cases does not coincide with the moment when the cash is received or paid. Speaking of a transportation company such as Russian Railways or Airflot, a ticket may be sold 2 months before the travel date, and it is only on the travel date that it becomes the revenue. Same for the costs. The cost may be incurred in one fiscal year, but actually paid for in the next year. This may clearly create a deviation in the costs when we compare them year to year or month to month. And this deviation will complicate the performance management process as we cannot really analyze why costs vary from period to period. And of course, this complicates the budgeting process due to the cutoff issue, when the expenditure and cash disbursements fall into different reporting periods. Thus, the main advantage of the accrual accounting is that it results in availability of adequate financial information for taking better business decisions. Speaking of the balance sheet, such balance sheet would include the assets and liabilities which are not usually present in the statements prepared on the cash basis. This not only includes the tangible assets such as property, plant, and equipment, and these items are often over 80% of the balance sheet of an infrastructure company, if we look at the Russian railroads, for example. But it includes also accounts receivable, accounts payable, accrued liabilities, reserve, etc., etc. The elements that result from the timely recognition of the economic events that do not coincide with the cash receipt or disbursement. Let's take an example of repairs and maintenance costs, which are huge for such transportation companies. Think of major aircraft maintenance procedure or scheduled repairs of a railroad bridge. If we take Russian railways, infrastructure maintenance is one of the main types of expenditure. If these major expenditures are incurred once in a few years, on a cash basis, we will see spikes of expenditure in 1 year and nothing in the next couple of years. Under the accrual accounting concept, the reserve for such repairs will be accrued on a regular basis over the period between these scheduled repairs. This will result in timely allocation of costs to the periods, and again, improve the quality of budgeting and performance management on one hand, and the transparency of the information for the users of the financial statements on the other hand. They, the users, will see a fairly even stream of costs in the P&L and can understand how much has been accrued in the reserves and how this will impact on the cash flow of the company in the coming years. By looking at the amount of the reserves and accumulated depreciation, a user of the financial statements can assess how much cash will be needed for the replacement of the long-term assets in the future. Transition from cash to accrual allows us to introduce the classification of the expenditure as well. Under cash basis, when the cash is gone, it is gone. We don't always know what it turned into. Is this expense, or have we received an asset instead of this? say a stock of materials or even a locomotive, which will generate future economic benefits for the organization over a period of years. And even if the cash disbursement is a real expense and not an acquisition of an asset, what kind of expense it is? Is it fixed or variable? Is it controllable by the management or not? Accrual accounting allows our clients to categorize the types of expenditure and monitor different types of expenses separately from each other. And again, the critical advantage of accrual accounting is the proper allocation of such expenses to the periods where they belong to, depending on when they're actually incurred. And this information is also valuable for the management of the company, as they can compare performance of their internal business units in a unified manner. For example, Russian railways consist of 16 main business units called railroads: Moscow Railroad, Far East Railroad, etc. Each of them produces their own financial statements, subsequently consolidated, and the management can compare the performance of the individual business units, such as profitability or level of working capital, etc. The profit of each business unit is calculated using the same accounting principles and classification of expenditure, such as direct and indirect costs, depreciation of fixed assets, etc. Obviously, such comparison would be distorted under cash accounting basis if we compare just the cash inflows and cash outflows. Under this scenario, an entity needs to plan and control revenue and expenses in parallel with the cash inflows and outflows. This is why all our clients, including both commercial sector, state-owned companies, and the government entities, have two types of budgeting: the budgeting for the revenues and expenses under accrual principle, and cash flow budgeting, the forecast of their cash inflows and outflows. This creates additional cycle of control and performance management. In addition to that, the accrual-based accounting brings in the concept of equity and the ability to measure how the equity develops, whether it increases or decreases. And such monitoring of equity development is one of the key metrics in assessing how well the management of the organization does its work. Getting back to our example of the Russian railroads, it is also important for the government and the society as a whole to understand the real cost of the transportation. In Russia, Russian Railways is the biggest employer countrywide and one of the major contributors to the GDP. At the same time, it is a key element of the social infrastructure, and therefore the pricing and tariffs are regulated by the government. And it is very important to find the right balance between the profitability of this organization, so that it continues to operate and pay salaries to their employees, and the pricing that is socially affordable. In order to find the balance, we need to understand the real costs of the transportation incurred by the railways. What is the level of their real profitability, and whether in order to achieve the socially acceptable levels of tariffs, we need to subsidize the company or not. And if yes, what is the fair amount of that subsidy? In order to make all these assessments, we need to have a proper accrual-based accounting. The accounting that can match the expenses and revenues in the correct period that they belong to, and eliminate the distortions caused by the cash accounting, as we discussed above. Going further, transition of the companies from general accrual accounting to IFRS or IPSAS can bring in additional advantages in analyzing and interpreting the information, as some new concepts are introduced. If you look at the financial statements of the Russian railways, the fixed assets represent over 80% of their balance sheet. The way we account for the fixed assets may have a major impact on the financial statements, including the profit and loss statement. This will impact upon all the matters that we discussed above, including the performance management and discussions around the tariffs. The depreciation rates and the impairment of the assets are obvious examples. It is important that IFRS as well as IPSAS allow us to select the depreciation rates in such a way that it reflects the actual duration of use of an asset and timely allocate the cost of the asset to the cost of the goods or services produced and sold. Another IFRS concept that appeared quite relevant for the Russian railways is the component accounting. When the useful lives of parts of an asset are different from each other, we account for them separately and depreciate them separately as well. And when we have to replace a part of an asset, for example, a section of a railroad track, say, as a result of some sort of nature disaster, we can take out of balance sheet one asset and create another asset instead. While under cash accounting, we would have a huge cash expense. Under IFRS, we have a new asset created. The asset will be subsequently depreciated and the cost will flow into the profit and loss statement gradually as the new asset is being used. This clearly has a positive impact upon the operational profit of the organization. Another interesting concept that we are currently introducing under IPSAS as part of our project for the Ministry of Finance in Russia is service potential. Although not currently applied by the Russian railways, it is interesting to consider, especially comparing it to the effects of impairment on the long-term assets under IFRS. Under IFRS, the primary value of an asset is its ability to generate future cash inflows. This is a reasonable concept from a point of view of a commercial entity. In the public sector, the assets occasionally do not generate any cash flows. In order to address this, a concept of service potential is introduced. According to IPSAS, service potential is the capacity to provide services that contribute to achieving the entity's objectives. Service potential enables an entity to achieve its objectives without necessarily generating any cash inflows. In the public sector, the primary reason for holding property, plant and equipment and other assets is for their service potential rather than for their ability to generate cash flows. If we look at the assets of an infrastructure company, for example, an electrical distribution grid or a railroad, due to tariff regulation, ability of its assets to generate future cash flows may be somewhat limited. One needs a lot of money to build the infrastructure, but one cannot set the service fee high enough to fully recover the costs incurred, as the government limits the tariff. Under IFRS, this would result in impairment of such an asset. At the same time, if we apply IPSAS concept of service potential, we say these assets are held by the public sector to provide service to the citizens, therefore should not be impaired, and we can continue to recognize them at their current value. So many interesting concepts to consider and a long road ahead to implement them. Last but not least, I would like to mention another critical factor in this transition, the people. A lot of effort is needed to change their minds and properly educate them, as both IPSAS and IFRS are concept-based and cannot provide specific instruction for each and every possible case. Both management and accountants should use their judgment in applying principles to their particular circumstances and transactions. And this brings another dimension to the reform. At one of the roundtable discussions that recently had as part of the IPSAS project in Russia, someone from the public said, "What do you mean, judgment of an accountant? Accountants should not be allowed to have any judgment. They should be given an instruction what to do." So this transition is not just about the accounting standards, debits and credits and the IT systems involved. It is about the people, their education and development. This is all I wanted to share with you today. Thank you for your time and all the best.